Thanks for tuning in to Wicks and Candlesticks once again. In this video, I am going to do my best to explain auction market theory in about 20 minutes. I hope I can get it done. I've got requests to show more real live examples um, to this strategy. A lot of you guys are really liking um, the auction market theory, what I have been showing, how I have been getting into trades and been winning trades. So let's get right to it. If you ever bought a house or if you ever seen on the internet and looked at a house or even watched a house, sit on the market, then you already know or understand how the stock market works. You just didn't know it yet. In this video, I'm going to explain auction market theory in plain English. No indicators, no hype, no guessing. By the end of this video, you should understand why price moves and not just where it moves. Because the market is not random, it is an auction. Let's say a house is listed for $300,000. One week, no offers. Week two, still no offers. What is the market saying? The price is too high. So the seller lowers the price. Now it's listed for $280,000. Still no offers. Then the price drop again to $260,000. Then suddenly buyers start showing up, offers start coming in. That price is now considered fair value. Now let's flip this situation on the same house, same condition. Multiple buyers start making offers. What happens? Price then what? It goes up. Not because the house changed, but because buyers are competing. That is what you call an auction. This is exactly what happens on the market. This is how the market works. Auction market theory, it says that the market is always doing one thing. It is searching for price where buyers and sellers agree. When buyers and sellers agree, price stops. When they disagree, price moves. Price is not moving because of indicators. It's moving because agreement broke. So you have balance is where the market says this is a fair price. So this is right here on my example, it's fair pricing. Okay. On a chart, a balance always look like sideways movement. You see how this is sideways movement here? Candles will overlap, price will go up, then price will go back down. Nothing urgent. That's just the agreement. See how price, you really can't see here because I kind of got some of this marked out already. See like how price is here? This is what you would call an agreement. Fair value, how price came up and down. Here, up and down. This is fair value. This right here is what you would call fair value. Okay. This little piece here is what you would call fair value. Okay. Can you see that? How price coming up and down here? Well, I have a bunch of these marked out already, so I would not waste time marking out all these locations. So I figure I get some of this marked out beforehand. So you pretty much get the gist of what I'm saying here. So this is when price is going sideways. That is fair value. That is balance. Now, imbalance happens when one side gets aggressive and the buyers say the price is too cheap or the sellers say the price is too expensive. So price moves away fast. So you have a balanced market here. So price came out of balance and now this is imbalance. Okay. There's less overlap. There's not a whole lot of overlap that happens in here. We can call this where this was a fair value here and then price left this area. Even right here, this small area here was a small balanced area, then price left very fast. And also, I forgot to mention, anytime I mark up my chart, I always start on a 30-minute time frame. That has been the sweet spot for me. So I do all this on a 30-minute time frame. I trade off the 30-minute time frame. I enter into my trades on the 1 minute, 2 minute, or the 5 minute. So in the imbalance, there's less overlap. There's more of a direction. So this is what you would call rejection. Okay. And here it's fair value. And here, the balanced market. And here is agreement, where buyers and sellers are making agreement. Okay. So discovery is when the market is exploring new prices. So when you see price come out of a balanced market and it go into an imbalanced market, if you look to the left over here, this is where balanced market was. Here is where price left. And so price came back down into a balanced market in this area. So when price is in a discovery, which you will see here, there's no agreement. So price keep moving until it finds a place where buyers and sellers are willing to do business again. So this right here area is where price came down, where buyers and sellers agreed to do business. So so fair value is just not one exact price. Fair value is an entire zone. Just like a house can sell for a range of prices, not one perfect number. The market doesn't need precision, it just need an agreement. Just like when you buy a house, you just need an agreement on a price, and that's pretty much what happens. This entire game is a game of an auction market theory, where price balances, where price leaves, price didn't come back just to check. So that's why in some of my videos you will see, okay, price left and it came back to recheck. So if you listen, look here, have price left here. It came down to this, what you would say, balanced market over here. It left, but it came up and tested this area here, but there was a continuation here. And so I'm getting a little bit ahead of myself when I explain this here because I'm here. And what you would call this is called value migration. How you have like a balance market here, then it went to imbalance, then you have like a small balance, compression balance, or a compression zone here, and then it went up and then it came again. So that is what you call value migration. So the market is asking one question. When price return back to an area, it's asking, is this price still fair? If price is accepted, we rotate. And what that rotation is, if price is accepted, it will rotate from the value area high that I have here to the value area low and so on. It will just continue to rotate or it will continue to rotate in a zone. See, this is a rotation here, okay? Until price decided to come out of balance to go into imbalance to find balance again. This is just like buyers are coming back to look at the house just one more time before deciding. So it's just like when you get ready to buy a house or when get ready to buy a car, when you make that decision, you go back to look at it just one more time, and that's what price does. So acceptance is measured in time. If price stays in the area being if price stays within the area, this is what you would call acceptance as well. Okay, so fair value, balance, and price has accepted in this area. Okay, so if price stays in this area, it's being accepted right in here. If price is rejected by speed, it's going into an imbalance. If price hits an area and then leave fast, it's rejected. That's it. No indicators required. Most traders lose money because they trade in the middle of balance. How many of you have traded in the middle of here and not really having a map on which direction that you need to go? Trading, when it comes to the charts, you have to have a map. If you do not have a map, you would get in trades, you would lose trades, you would chase trades, you would chase breakouts, and you would buy by all means lose, 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 and you don't want to do that. So again, most traders they lose money because they trade in the middle of balance. They chase breakouts. They buy after a bidding war, and they don't know where the value is, and don't know where the value is, and you don't even know where your risk is. Auction market theory is very simple. Price moves, find an agreement. Price stops when agreement is found. Balance is an agreement. Imbalance is disagreement. And the market always check before it commits. Okay? So I now want to get into some of these examples that you guys asked for. So right here, we have a balanced market. And within this balanced market, I added a volume profile to it. And the volume profile that I added to it is just wherever the area of the balance is, that's where I draw the um, the profile. And the profile that I'm using, it is called the fixed range volume profile. You can go to indicators and you just type in fixed range volume profile. It's just this one right here. You click on it, you add it to your chart. I know some of you guys, some people have asked me what was my settings and my settings that I have for it. Let's see if I can click on it. This is all the settings that I have. So the inputs, I have 200 rows, volume up down, value area, I have 68, and I just have my value area high. My width, I just have 100, and these are just my colors. And these colors, just colors, pretty much. So here's what is very important. Here's what's very, 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 very important. Very important that when you're drawing your video, when you're drawing your profile, you want to look at where price was and how price reacted in this area. Okay. So I want to also clear one thing up that when we are using this volume profile, volume is not an indicator, it is evidence. Every volume bar represents completed transactions. That means buyers and sellers agree to do business at that price. No agreement, no volume. High volume means a lot of agreement. Price, this is very important. Price moves away from volume, but volume tell us where the value actually is. Think about the house example again. If a house sits on one price and gets shown over and over and over, that's like high volume. A lot of people are agreeing that their price is worth looking at. But if the price barely gets shown and the price moves away fast, that's what you would call low volume. The market didn't agree right there. When you add volume to auction market theory, you get a very important concept. Fair value is where most of the volume is traded. That's where buyers and sellers were most comfortable. And that's where the auction pause. That's value. This is why price keep coming back to the same areas. The market remembers where the agreement happened. When price trades in an area with high volume, it tends to slow down. It rotates. It chops because buyers and sellers agree that it's balanced. So I'm going to show you some examples. Price chop. This is fair value. This is where buyers and sellers agreed. This is where buyers and sellers agreed. This is where buyers and sellers agreed here. Here's another example. me see. Here's another example. Fair value. This is balance. Even this small one right here, fair value. And you would look and see how price will return to these areas. Okay. There was one example was is like the perfect example that I should have even like here. See, our price was a balanced market here. It came down to check it again, which is right here. And this is how you would have known this was a buy. So after price get done chopping around, it goes imbalance to find another area. So we would call that rejection. All right. So low volume means rejection. When price moves through an area with very little volume, it moves fast. It doesn't want to stay there. Price was not accepting. That is called rejection. The market moves quickly through prices it disagrees with, and it slows through prices it agrees with. Here's the full cycle with volume added. First price balances with high volume, then price break away with low volume, a fast move, then price come back. Why? Because the market wants to check that high volume area again. It wants to check the high volume area again. So price moved away from it, then price came back to this area. It came back to this area to see if this was a fair value. If price accepted again, which right in here, you can see how we had a balance area right in here. It accepted, you would get continuation. I'm going to say that again. If price comes back to an area where it left from the balanced market, and if it goes into a fair value again, which is here, you would get a continuation. What's the continuation? The continuation price left from down here and began to go upward. Price came right here to fair value and then it continued. Okay. So I'm gonna find another example here. So this is an example right here. Let me turn this off so you guys can see it. So look at right here. Price. This is a fair value here. Fair value right in here. This is a balanced market. Price left, imbalance, came back, balanced market. It came here. Once it came back here, guess what happened? It came down, it came up here, it rejected, came back up here, and it continued. See, volume, it will help confirm the answer. Most traders misuse volume. They think high volume means buy or sell. That's wrong. Don't get caught in that trap. High volume means agreement, not direction. Direction comes from where price is relative to value. High volume at the top of a move can mean distribution. High volume at the bottom can mean accumulation. The context really matters. With auction market theory plus volume, you stop chasing, you stop guessing tops and bottoms, you stop trading in the middle of nowhere, you trade from value or away from value. I want you to remember auction market theory explains why price moves. Volume shows where the agreement happened. High volume means acceptance. Low volume means rejection. Price leaves value, then come back to check. Once you understand that, the chart slows down. The chart start talking to you. You will begin to understanding what you are seeing in these wicks and candlesticks. Then trading will become decision based, not emotional. Learn the rules of the game and play the game by the rules. Once you do that, you will understand how auction market theory is. And once you couple it with the volume profile, it would definitely change the way you trade. I'm going to say that one more time. Learn the rules of the game and play the game by the rules, and you will become a consistent trader. So, a couple of examples here. So, as you see right here, like I'm on a 30-minute time frame. So, I mark up everything on a 30-minute time frame. Once you mark everything up on the 30-minute time frame, we just start right here. On the 30-minute time frame, then you will go down to the 5 minute, 2 minute, or the 1 minute to get into your trade. So when you are when you add the volume profile to the auction market theory, what you will have here is you will have the value area high, the POC, and a value area low. Why is it something ain't this isn't loading? This isn't loading. Okay. So I always start off with the previous session, and with the previous session, I'll open that up so you can see my settings here. Um, I got 50 for this one here, and of course the same thing. My inputs, I have 68, and my row size I have 100 here. And this one, this one right here is a little bit different from the session profile because on here you can actually give you can have more period. You can go by the bar, the minute, the hour, the day, the week, and a month. I am pulling a blank. What is this one called? This one is called, and I really like this one. Oh man, this is called. Oh, I did not mean to hit that. Let me go to indicators, and we go to periodic, periodic volume profile. So that's what this is. So I don't know why this one is not popping up because I did have it. So this was a previous day. As you can see, this is at 6 p.m. here. If you look down here at the time, this is at 6 p.m. and the market ended here. So this would have been a previous day for this day here. So this was what, October the 28th. So you would have had this drawn out, your value area high, your value area low, your POC. We all know with volume, or if you don't know, your POC in here, this is the fair value within this range here. This is what you would call fair value. And price almost always wants to go back to the fair value. It wants to go back and retest, just like I stated earlier. This is a balanced market here. And you see how price came way back down here. So wanted to, if you was looking for a trade to get in, you could have had all this marked out, went down to your 5 minute time frame, waiting on your rejection, waiting on a rejection in the reversal patterns. Okay. The reason why I can't go to the 5 minute time frame because it will not allow me to go back this far, unfortunately. But if you go back to if you go to FX Replay, that is a back testing website, you'll be able to drop to the 5 minute, go and find like be able to drop to it. Or I believe if you go to um, the replay here, you'll be able to, put a marker to where you're at, and then you just go to replay and you will choose this date, and then you fast forward, and then you should be able to drop down to the 5 minute. I believe so. But so as you see here, price had a balanced market here. It left. This is 6 p.m. It started here. As we was getting closer to um, the opening, price came all the way down here, As we was getting close to the opening, you got price came, and then around about 2:30 here, price came down here, and then it rejected price. It came down to an acceptance to balanced market, and then it rejected and went in balance from here. Okay, and you could have rolled this. You could have rolled this all the way here to this fair value POC. And so if you would have taken this buy, let's say if you would have got in here at the top of this zone right here, that's 117 points. Now, if you would have took it to the developing um, POC or value area low or um, up here to these highs, that's 265 points before the market closed. So I'm gonna find another example here. I got so many. I wanted to have a variety because that's what someone asked for. So if we look at this one here, let me turn this off. See, you see how this is a perfect one here. So you see how we have a fair value. This is a balanced market. And I drew the profile here, a fixed range profile here within the balance area. You see how price came down here. It came down to the value area low in a rotation. See how price came down here, then it came back up, came right back down. It came down to a rotation. And what it did, it came back up to retest the POC area. And then it rejected and came down to this balance area here. So if I was to draw a fixed profile here, price is going to you'll see how price came down to this POC area. So if I was to take my zone and I put it here, this is where I would have got in. Okay. Now I have all these zones are a fixed zone. My zones, I draw them from 25 points to um, 20 points. And the reason why I do that is because when you take an average, how I came up with that, when you take the length of these candlesticks here, of the wicks, that's 32, 7, 19, 15. So when I took an average of like almost 100 candles, yes, I sat there and I marked a whole lot of them out. And so the average was when it came down to it, it came down to about 20, 20, 25. So, or, that's why this 20 is here and I have this one at 50, but this 50 was like at a, that's like at a higher time frame. And so this lets me know, this gave me a good idea how far my candle wicks will come around my key level, the POC, the value area high, the value area low. Because a lot of times when price reverse, it does not owe you to come directly right here in the middle. It will come into a zone. So let's say, for instance, this is a perfect example right here. If we were looking for sales at the value area high, because anytime you come to a value area high, you always look for potential sales. Okay. When you come to the value area low, you look for potential buys. When price is in the middle, you do not deal in the middle. You do not deal in the middle. You wait. You sit on your hands. Okay. This is the rule to the game. Now play the game by the rule. If you go outside the rules, the market will tell you real quick. Okay. So, so we have this balance area right here. We got this balance area right here. And so we now can use this as a profile to trade off of another day. And as you look, see, this here was Monday, November the 17th of 2025, unmitigated area. You see how price was in a balance. It came down through value migration. Price did not come back up here until the 19th. So 2 days later, price came back up. What do we have here once it came back up to this POC here? A balanced market. And so what price did, price started a rotation. It came down here to the value area low, and then it rotated to the value area high right here. Came right over here. So again, when you learn the rules of the game, you play the game by the rules. So when price came over in here, you look for a potential sale because you're at the value area high. Now, if you was to drop down to the lower time frame, you will begin to see how price is starting a downward trend. And you could have caught this sale. Your exit could have been in this zone here or this one here. So this whole entire area right here is what we would call a balance area. This is what we call a balance area here. And so for an exit, I would use my fixed range, and my exit could have been here at this POC. It could have been here at this value area low. All in all, if you would have called the top of it, it's 500 points here, 690 here, 427. Even here, if you would have called it here, that's 225 points. But again, this is on the 30-minute time frame. But once you learn how the market moves, you will learn how to stop getting out of good trades. You will not be afraid of pullbacks anymore because I used to end good trades because price is doing a pullback and I would just shut the trade down and then it started going in a way that I wanted. Right here, balanced market. So right here, you see right here, you can wait till price come down here for the retest coming back to see what happens if we get a rejection off of here. Not yet, but here, if we look at this area right here, I will call this a balance of fair value. Price has accepted here. If I draw a fixed range profile from here to there, and let's say I wait to price, let's say for instance, if I was waiting on to get into a trade, price came, this is the balance area, it left here, it came back up, and what did it do? You again, it came to the value area high, you look for sales. You see how price sold down at the value area high, okay? Price came back up, and what did it do? It went into a balanced market, it came down to retest this POC. It came back into acceptance and then it moved away from acceptance very fast. And so price went up. And so you could have got in this trade and held it for a little while. So if you could have got in here, it's almost 170 points before the market actually closed. So find another example right here. We got a fair market here. Okay. Got the value area low, POC, and here. Yes, everything is kind of close. I still do the same thing. Let's say if I was waiting on this price to come down here, I'm going to watch it. I want it to become balanced here. So once it become balanced, if I get a balanced market here, I know how to trade it, or I can trade it on a first tap. So if you see here, price didn't come down here, it's going to come down here sooner or later. But if you see here, if you had this marked out and you had this marked out, you could have caught this trade here. Price came down to the value area low, and what did it do? It took off. And you see how it went through the POC here? Price was balanced here, and what did it do? It went into another balanced market, came down to test the POC, and it went up. And you have to learn again on a smaller time frame, and you really can see it on here. This is what you would call a value migration. How price is going up slowly, candles are overlapping, but then they go balance, and then they go up. Okay, so this example here, let's look at this one. Let's look at this balanced market here. You got your value area low, the POC, and the value area high right there. Look right here, this POC here. What did price do? This would have let me know, okay, if I'm on my 1 minute time frame, on my lower time frame, if I was up at 2:30 in the morning, but look how it came perfectly into this zone and it rejected it. Okay, all right, balance, imbalance, balance, imbalance. But let's say if you want to say, okay, this is a high probability trade, price has it's way down here, it has not came up here, you can actually wait to price come here again. If price here at the value area low, what do? You look for potential buys, but you have to look at the candlesticks, what they are telling you. So here we had a fair value. So anytime price is in a fair value, you stay away from it. So all around here, this could have been a place just to watch right here. And what you can add to this, if you look, this is nothing but fair value right in here. So if you wanted to try and catch a trade, have that. Click here. This would have given you a roadmap to trade. Okay. So you could have had this drawn out. You see the value area high here, how price, even though you had a value area low here, you watching this, keep an eye on it. You have this drawn out. Price came and checked it down. It retested these areas. Retested this here. This was a retest here. So it came back to see, okay, are we still good at fair pricing? Okay, we move on. Let me see if I can find one more example here. Look, value area high, sell. Now this one right here, I did take this one right here. I do remember the day I took this one. I did take this one. I did. I do remember taking this one right here. I took that sale. But when I took that sale, because I think that was like the biggest one that I've ever done. So I had this here, and I drew the fixed range there. Although I had this here, because this is still that, that a point of control where buyers and sellers like this price, but I had this right here. But um, I did see how price came up here, how price came up here to this POC here, and in the evening session, I seen that it still wanted to do business over here. It kind of opened up pretty nice, and so I took that sale in here. This I believe like right in here somewhere. Wrote that sale down, and of course, um, I didn't have that many contracts, but I did ride this out for quite a while. So these are just some examples of auction market theory with volume profile. I made a video of today of a buy that I got in. If you look through the videos, you will see I believe it's dated, it's the 26th of 2026. This was the buy that I was in. Definitely got into that buy, and again, just to show you here on the 30 minute, but I kind of broke it down differently in the earlier video. So price close above that. So I really hope I said something to help you out. I didn't mean to bore you guys this long, but if you stayed all the way through the video, you definitely got some gems here. This has definitely changed the way I look at the market. Um, Peace out.